Imagine walking into your local bank, the same one you've used for years for your checking account and mortgage, and right there, next to the familiar rates for euros and British pounds, you see it listed on the digital board, the Iraqi dinar and the Vietnamese dong. This isn't a scene from a speculative film or a deep state conspiracy theory. This is the very reality beginning to quietly unfold in specific financial institutions across the United States, a development so profound and under the radar that its implications are almost impossible to fully grasp at this very moment. We are talking about a fundamental shift in the global financial architecture, a move that signals a direct and undeniable precursor to the long-awaited revaluation, the RV, of these currencies. For decades, the dinar and dong have been subjects of intense speculation, often relegated to the fringes of the financial world. Discussed in hushed tones on online forums and by niche investment gurus, the mainstream financial media dismissed them, economists scoffed at them, and the average person had no idea they even existed as potential investment vehicles. But now, the very bedrock of that mainstream system, the brick and mortar banks that form the backbone of American commerce, are beginning to legitimize them in the most tangible way possible by facilitating their exchange. This is not about buying exotic currency from a specialized, somewhat shady online dealer. This is about walking into a regulated, FDIC-insured institution and conducting a transaction as normal as depositing a check. The psychological impact of this alone is seismic. It moves the dinar and dong from the realm of speculative fantasy into the realm of tangible, tradable assets, and that shift in perception is the first and most crucial domino to fall. Think about what this means on a practical level. For a bank to offer a currency exchange service, it must have a legitimate and verified need for that currency. It must have systems in place to handle the buy and sell orders, to manage the liquidity, to secure the physical notes, and to comply with a mountain of international finance and anti-money laundering regulations. Banks do not undertake this level of operational complexity on a whim. They do it in response to demonstrable growing demand and, more importantly, in anticipation of future liquidity events. They are positioning themselves at the gate of what they believe will be a flood, not a trickle. This quiet initiation of exchange services is the banking equivalent of a Fortune 500 company quietly acquiring a massive amount of land right before the announcement of a new multi-billion-dollar international airport being built on that exact spot. It is a strategic move based on forward-looking intelligence and a calculated assessment of risk versus reward. The narrative we have been fed for years is that the dinar and dong are hopelessly unstable, hyper-inflated currencies with no hope of recovery. But if that were the absolute unchangeable truth, why would a risk-averse, highly regulated U.S. bank ever touch them? The answer is they wouldn't. The very act of listing these currencies is a silent yet screaming testament to the back-channel negotiations, the geopolitical agreements, and the economic restructuring that has been taking place behind the scenes, completely away from the public eye. This development tells us that the conditions for revaluation are not just being met, they are being actively integrated into the Western financial system. The timeline we've all been waiting for, the one filled with vague promises and frustrating delays, is now converging with tangible, on-the-ground reality. The banks are preparing, which means the flow of capital is about to be redirected. They are setting up the plumbing for a new financial reality, and the faucet is about to be turned on. For the astute observer, for the individual who has held on through years of uncertainty, this is the most validating sign possible. It is the signal that the patience, the faith, and the strategic positioning are about to be tested in the most public and profound way. The quiet humming of a bank's currency exchange desk is about to become the roar of a global financial renaissance for those who are prepared to listen. So, what does this seismic shift at the institutional level actually mean for the global economic order, and more importantly for you, the individual holder who has weathered the storm of doubt and delay? The integration of the dinar and dong into the U.S. banking system is not an isolated event. It is the key that unlocks a series of cascading consequences that will fundamentally reshape the balance of financial power across the globe. For the past several decades, the world has operated under a de facto dollar standard, where the U.S. dollar has reigned supreme as the primary reserve currency, the dominant medium for international trade, and the ultimate safe haven asset. This dominance has granted the United States unparalleled influence, allowing it to project power through financial mechanisms like sanctions and to run massive deficits with a safety net that other nations could only dream of. However, the silent introduction of these historically undervalued currencies into American banks signals a deliberate and calculated move away from this monolithic system towards a new, multipolar financial world. This is a world where economic sovereignty is restored to developing nations with vast resources and human potential like Iraq and Vietnam. By facilitating the exchange of their currencies, the U.S. banking system is implicitly endorsing their economic stability and future growth trajectory, effectively betting on their success. This is a monumental vote of confidence that legitimizes these nations on the world stage in a way that political speeches or trade agreements never could. It tells the global market that Iraq, with its astronomically vast oil reserves and untapped mineral wealth, is finally poised to leverage those assets on its own terms, with a currency that reflects its true intrinsic value rather than the value imposed upon it by decades of conflict and instability. It announces that Vietnam, with its booming manufacturing sector, strategic location, and incredibly industrious population, is ready to transition from an emerging market to a fully fledged economic powerhouse, with a currency that mirrors its explosive growth and potential. The revaluation is not merely about adjusting a number on a screen, it is about correcting a historical injustice and aligning a nation's monetary value with its tangible and intangible wealth. This process shatters the old paradigm where wealth was systematically extracted from these resource-rich nations, leaving their currencies artificially suppressed and their populations in a state of perpetual economic struggle. The RV is the mechanism for economic decolonization, a reset that allows these countries to reclaim their financial destiny and engage in international trade from a position of strength and parity. For the global economy, this means a redistribution of financial influence. The world will no longer have a single economic pole, but several, creating a more balanced, albeit more complex international landscape. This diversification inherently makes the global system more resilient, less susceptible to the shocks that originate from a single nation's economic policies. It introduces new avenues for trade, investment, and cooperation, fostering an environment where growth is not a zero-sum game but a rising tide that can lift all boats. The petrodollar system, which has underpinned dollar demand for generations, will inevitably evolve, making room for petrodolars and other commodity-backed trade agreements. This doesn't mean the dollar will collapse. It means it will have to share the stage, becoming first among equals rather than the sole performer. This transition is the bedrock of the new financial age that prophets of currency revaluation have been foreseeing for years. It is the tangible manifestation of the Nisara Jasara ideals of global debt forgiveness and monetary reset, not as a mythical event, but as a practical, rolling process initiated by the very institutions we were told would resist it the most. The banks are not doing this out of altruism. They are doing it because the trajectory is now undeniable, and the profit to be made from facilitating this new era of commerce is incalculable. They are positioning themselves as the gatekeepers of the new financial frontier, and by holding the dinar and dong, you have already secured your passage across the border before the gates have even officially opened. Now, with this unprecedented transition from the theoretical to the tangible, with the gears of the global financial machine beginning to turn in our favor, the most critical question shifts from if and when to what now. What do you do when the quiet news becomes a roaring headline on every major network? When the controlled process of exchange at a few forward-thinking banks becomes a frantic mainstream gold rush? The difference between life-changing wealth and a missed opportunity of a lifetime will be dictated by the actions you take in this very moment, in the calm before the storm. The information and strategic clarity you possess right now are your most valuable assets, far surpassing the paper certificates in your safe. The first and most crucial step is to arm yourself with unshakable knowledge and a crystal clear plan of action. The initial hours and days following a public announcement will be a whirlwind of confusion, misinformation, and emotional chaos. Mainstream financial pundits, who have spent years dismissing this possibility, will scramble to explain it, often getting it dangerously wrong. There will be a cacophony of voices, from fearmongers predicting economic collapse to opportunists offering dubious, high-pressure advice. If you wait until that moment to formulate your strategy, you will be making the most critical financial decisions of your life from a place of panic and confusion, and that is a recipe for costly mistakes. Your plan must be your anchor in that coming storm. You need to know with absolute certainty the difference between a bank that is merely exchanging currency and one that is facilitating a true revaluation at the new sovereign rate. You need a meticulously researched and vetted list of primary, secondary, and tertiary financial institutions, including their specific procedures, required documentation, and contact information. You must understand the profound distinctions between a simple cash exchange, which may have limitations, and the process of establishing a structured asset account or a private wealth management relationship designed to preserve and grow your new capital. This is not about simply swapping one stack of bills for another. This is about strategically transitioning your entire financial identity from an individual of modest means to a person of significant generational wealth. You need a pre-established relationship with a certified financial planner, a tax attorney, and an estate planner who understands the unique nature of this event and can guide you through the labyrinth of asset protection, tax mitigation, and philanthropic structuring. This is the level of preparation that separates those who see their wealth evaporate through fees, poor investments, and predatory requests from those who build a lasting legacy. This is why you must stay irrevocably connected to a source of truth, a community that cuts through the noise and provides real-time, verified, and actionable intelligence. The journey does not end at the exchange counter. That is merely the starting line of a new, more complex, and infinitely more rewarding race. The responsibility that comes with this level of abundance is immense, and it requires a profound shift in mindset. This is your moment to rise, not just as a beneficiary of a financial reset, but as an architect of a new future for yourself, your family, and your community. The world is about to change, and you are positioned at the absolute forefront of that change. Do not be a passive spectator. The time for waiting is over. The time for decisive, informed action is now. This is your call to action. Secure your legacy. Do not let this historic opportunity slip through your fingers because you were unprepared for the final, most important step. Stay locked on this channel. Hit that subscribe button and turn on all notifications right now, because in the coming days and weeks, we will be breaking down every single facet of this process. We will provide you with the bank lists, the contact protocols, the interview questions for financial advisors, and the step-by-step blueprint for navigating the post-revaluation landscape. We are your intelligence hub, your strategic command center for this event. Your vigilance and patience have brought you to the brink of this new dawn. Now, take the final step to ensure you cross that threshold with confidence, power, and the absolute certainty that you are ready to claim the future you were destined for. Subscribe now, because the next video we release could be the one that guides you through the most important day of your life.